Good morning, guys. Welcome back to the Daily Audacity. With me, your host, Simon from Audacity. Got a bit of an update on everything that's going on with FTX today, from what I can see so far, and I'm just getting into it. So expect more updates coming. Obviously, it's been a couple of days since all this kicked off, but I've got some figures and what's actually going on. So we all know, well, those of you who know, those of you who don't know, FTX has had a real issue with liquidity. They've still got assets, but turning those assets liquid is virtually impossible for them because they've got no access to liquidity at all. And all of their collateral is basically their own tokens. It's not looking good for anybody. Also, there's going to be some knock-on effects from this. They were in process of opening had opened a rolling credit facility for BlockFi to help BlockFi get away from the 3 Arrows Capital escapade. Obviously, they aren't going to be able to do that anymore, so that's going to have a knock-on effect to BlockFi, and I would imagine that upcoming they're going to halt withdrawals, and that's going to be another thing that knocks on. I would also imagine that there is some tie-ins with other companies and other margins that are going to come to light as a result of this, as they try to call in their markers and stuff that they've done. So I would expect this not to be over in any shape or form, certainly in the next couple of days. I think you're going to see knock-on effects from this for weeks and months, and stuff's going to come to light for weeks and months, which has already started to happen. It looks like the Ontario Teachers Association had nearly 100 million of their pension fund with FTX as well. So we're going to see what's going on, because FTX have been very politically active. They've been very heavy in DC. Sam was, I'm going to say, well liked, but also his mother has a lot of tie-ins with super PACs and fundraising for parties and politicians. So we're going to see an awful lot of fallout, I think, from this one. I think if anything's going to drive DC to start looking at some serious regulation, it's going to be this, because I think there's a lot of politicians that are going to get burnt publicly from tie-ins and what's allowed to be sort of happening. The also other interesting tie-in is with the SEC. Gary Gensler has been very active with FTX, and FTX have been very active with the SEC and lobbying in DC as well. So this might be an interesting development moving forward. I know it's not good for anybody's users. The one thing I am going to start off with at the moment, with everything going on, I would strongly recommend that you do not hold your assets in exchanges and other places. I personally have very few assets on exchanges. I do trust Uphold. That's just my personal preference. They've never done me any harm, and they're very transparent with their holdings, and they always have been. I have a little bit on there for, those times when things pump and dump and all the rest of it. So, but aside from that, the majority of mine are in cold storage. I would recommend everyone practice really safe storage of your own assets. I don't really subscribe to the whole if it's not your keys, it's not your crypto thing. I'm waiting for trusted counterparties to come along, which is why we need regulation. But certainly in this turbulent time that we're going through now, I would just look at removing assets from places that you don't control the keys, just to safeguard your own personal assets, would be my recommendation. If you don't know about cold storage, and you're only used to hot storage or hot wallets, then please reach out on Discord. Somebody either from our team or from our community will happily help and happily walk you through what we would suggest you use as a decent cold storage device. But at the moment, I don't think it's fair to say that anywhere is particularly safe. Certainly in the DeFi space and the decentralized exchange space, and in the centralized exchange space, because we don't know what knock-on effects this is going to have. We don't know how many exchanges were in bed with FTX, and we don't know what they're going to do with your assets. So I would look at it. It's going to cause a bit of a run, and I think that sort of action will actually perpetuate sort of a collapse in the rest of the exchanges that aren't particularly large and well funded and with access to good liquidity. But at the end of the day, they're still your assets, and you can't be held accountable for their practices with your assets. So I would go for that extra mile. So the long and short of it is FTX ran, I would call it either ring funding or circle funding or Ponzi-nomics, or however you want to look at it. But they were very closely in bed with their trading partner, which was Alameda Research. Alameda Research had 14.6 billion worth of assets on the books when all this kicked off. And their liabilities were $7.4 billion. So, they were 50-50 liquidity, pretty good. As it turns out, though, the money they had on the books, over 6 million of that was either unlocked or collateral in the FTT token. And around, excuse me, around 4 or 5 billion of that was also either unlocked Solana or assets on the Solana chain. And the thing that they've done with this is they operated what we call a high float and a low fully diluted value. So they controlled considerably more of the asset than was available on open market. So they allowed themselves to actually purposely keep the value of that token quite high, which on the back end of that allowed them to have high collateral to borrow against because they had an awful lot of the token. This is really bad practice because they're manipulating a market by holding the majority of the tokens and keeping the value of a token purposely high. On the back end of that, so they're borrowing against it, so the collateral is in that token itself. If that token value goes down, then they're going to get margin called, which is pretty much what's happening, and it's never good. So on the 28th of September, it was a fact that they only had 173 million of the FTX token transferred to them. And as of, I think, last week, I think they only had 123 million in cash. Now, for some reason, CoinDesk managed to get hold of their financial report, which highlighted all of these issues. CZ Binance obviously got hold of that tweet from CoinDesk, or the report himself sent to him by CoinDesk or whatever, and decided to publicly disclose that they were exiting their FTT position because of the revelations of what happened in that report. So he went public saying that they're going to sell 500 million worth of FTT. Obviously, when you know you've only got 123 million in cash and you try and exit a $500 million position, you know that there's going to be an issue. So I don't know if he actually did this on purpose because of the feud, or if he wanted to actually end bad practice and just weed out. But I can't figure out a way that he didn't know what was going to happen. He must have known what was going to happen when he publicly announced a 500 million sale with only 120 million in cash. FTX reached out to CZ and said, we'd like to buy it. OTC, we'll pay $22 for OTC now. So as in not to affect the open market price. And CZ declined that and just went straight to market with it. That caused the FTT token to start plummeting. The knock-on effect from that was all the bad practices that Alameda and FTX had gone through all came spiraling, and everyone sort of figured out what was going on, and there we go. Now, Sam is working with other chains. He announced with Tron, Justin Sun, that they were going to do some sort of rescue package to give users access to liquidity that had funds from the Tron network on there. I would imagine there's going to be some other things, but users are going to get hurt. When it comes to the governmental stuff, I would imagine that people like the Ontario Pension Fund and all are going to get their money back. I can't see, that not happening, because that would be just really bad for teachers and all the rest of it. So I would imagine that they will put them on the top list with creditors and applications, but I can see users getting hurt a lot. As this unfolds, I think we're going to start seeing, I think Jesse Hines put out on Twitter that Sam probably knows where an awful lot of the skeletons are buried. And I'm openly going to agree with that. I would imagine that there's going to be some fallout on this, and there's going to be other people brought down as a result of it, because I think it's going to be okay if I'm going and other people are going as well. Overall, I actually think it's good for the space. I hate to see users get hurt, but I think that this will really drive regulation a lot more than the Terra situation did. I mean, we all know what happened when Luna did its USDL, excuse me, their peg dollar from the Luna network. And that caused a bit of an uproar in DC. I think because of all of the lobbying and all of the political connections and all of the campaign donations and everything that happened around FTX and the sponsorship deals and all of that sort of stuff. So, because you've got people like Tom Brady and all those people that are all caught in the crosshairs now of what's been going on. There's going to be a lot of egg on people's faces, and there's going to be a very public sort of comeuppance from this one. And that's what's going to be interesting to see. Obviously, we'll keep you informed as this develops, but as it stands, FTX is no longer open for business. I think Alameda is winding down. They're trying to rescue, and they're trying to give packages that enable liquidity for users to withdraw their funds or to exchange their funds or anything they had staked or. But I'm not holding my breath on this because, past has seen things that just don't happen for people. So now we've got Celsius and Freeway, I believe, are still in a rescue plan. Obviously now we've got FTX, and there's a lot of washing out in the crypto space, which overall for me is good. It's nice to see that FTX US operates the same sort of thing as Binance US and the same principles as Uphold, where they're fully backed and they don't do any shady practices with people. So, that one continues to operate as normal. I would imagine that they're still going to close it because I would imagine that it's still going to get no regulation. And I would imagine that it would get shunned by regulators moving forward. So I would imagine that, FTX US will still close as well. That's just my opinion. It's not a fact. Overall, it's disgusting what's happened and the practices are disgusting. I know Sam came out and was very public, but there's no way that, it's just not good business. It wasn't, has he called it, and I will quote, I don't normally swear, but it wasn't has he called it a fuck up, because that's what he said. He said that I fucked up, and I can't see that. So it wasn't it was my bad, I got the math wrong. It was really bad on purpose, shady business practices. So the whole public apology and it was all my bad and I made a mistake, I don't subscribe to that, because it wasn't just a mistake, it was an outright bad business practice fully going through, and you must have known. It's not one of those things that you can just say, oh yeah, we'll do that, and it's that simple. And again, I just feel sorry for users, but I am grateful that I think that this will push regulation to the very forefront of any congressional committees at the moment. And I think we'll see stuff moving forward, because I would like to see better regulation. I don't like to see the regulation by enforcement that's by the SEC. Not everything's a security, I agree. If we can come up with a sensible way that we can actually move these practices even into a regulated security environment, they start off as whatever, and this sandbox allows us to move into securities, then great, fantastic. As long as we know the rules of the road, then we can work with them. And I just, again, feel really bad for the users, and I know I've said it a few times, and I am sorry, but I'll keep everybody updated with what I find as we move forward. But at the moment, it's not looking good. I think they're going to need about 12 or 14 billion in total. I don't think they're going to get that sort of money from anybody. I don't know if it's been announced yet about Binance not moving forward, but Binance won't move forward with the sale. I don't think they could carry the debt safely, and I don't think that they could make people whole. I just don't think they've got those capital funds. I know they're a big exchange and they probably could stretch themselves to do it, and they probably could do a recovery plan, and they probably could put together something with other people and other debtors and creditors and raise equity from hedge funds and as a part of a rescue package. But I can't see the interest there, because I don't think there'll be anything in it for them. So I just think that that's going to be a non-starter, but that's just my opinion again. And until we get an actual confirmation from Binance about what they're doing moving forward, then we'll see that. Take care, and I'll speak to you all soon. If you like the show and enjoying the show, please remember to subscribe and like and share. Bye.